to the futures. Oh, or Forex Focus. Wow, that was definitely a brain fart.
That's
I
all
should
right.
leave the openings up to you.
You've been doing
Steve
this so
Studding.
long.
Look at you. It's the haircut threw me off.
I know.
Again, few guys get to be 10. How you get to be an 11 is just unfair. Well done.
Thank you. It cost enough to warrant that compliment, so I appreciate it.
So again, you went to the kitschy blind barber place with the speakeasy in the back.
Oh yeah. And it was slammed. I went on a Saturday, and yeah, on
Have you
Saturday.
had this haircut for 2 days? And I'm just noticing it now.
It's all right.
That's the most troubling aspect of this whole thing.
It's all right. You're a
I'm
busy
going to let
guy.
you talk for a while now because I am not making any sense whatsoever.
No, I went on Saturday, and it was so crowded because everybody wants to go. I think they were just behind because I went at like 4, and so it was standing room only. You couldn't even get a seat in there.
Now, do you make an appointment or you just walk in?
You make an appointment. They're harder to get than you'd think. Well, I only go to one person. If you go to anyone, I go to Kelsey.
A delicate thing. You want it.
Exactly.
It is funny how my oldest son, we took to a woman who cut my hair when I was a kid.
Nice.
And he went to her until she retired, until he was 28. So
I've had
it's like
3 people cut my hair.
You're living downtown now. There's some places to go. No, I'm going to Shelley.
Yeah, no, I found this place because when I started working here, I used to go somewhere in Northfield that my friend's mom went.
Oh, there you go. Yeah.
Paul, great guy. But when I came down here, I was kind of scouting around who had good hair. Went over to Todd McCarthy himself. This was when he had like longer hair. And so I said, all right, where do you go? And he said, blind barber, but you got to go to Kelsey. And that was the first time I'd been in like a barber shop. Usually, my hair's been longer historically as well. So usually it's a more salon.
Now, did you feel better or worse knowing that Frank goes to the same place?
Well,
because you did go to the rock star of hair, Todd McCarthy. So.
Yeah.
But then you went to...
Then I passed it along to Frank.
So he took your...
Correct.
I gotcha. So he's a follower.
He's a follower. It's pretty public. It's one of the most public things he does.
See,
but yeah, my haircut hasn't gone down since he started going there. So...
that's fascinating.
Yeah, it's fine. We got 50 degrees here.
Yeah. Gorgeous outside.
It's never felt better. Yeah.
It's nice. And you know what? It's so funny. My wife, I got home and she goes, "You're home so early." And it's like, I'm home at 5 o'clock.
It's just light out.
It's just right. It's just light out, which is nice. I know we're due. Chicago's the same thing. It's not going to be fantastic every day for the next 2 months, but at least we're seeing a little bit of a change in.
Yeah, and one of the things I hate about winter is I find myself talking about the weather so much, and you feel like I like to think I'm an interesting conversationalist, but it's so top of mind, and when it's dark all the time and freezing, that's all you can think about. It's horrible.
Yeah, it's good to be past that.
Are you going to get out of here anytime soon? A little weekend away anywhere? You like Florida?
I'm going to a conference in a week.
Oh, really? Nice.
In Florida, so that'll be good. But no, don't have a lot of other stuff planned. How about you?
Is it nice or is it Orlando?
No, it's Boca, so it's nice.
All right.
Yeah, no, it's not Orlando.
This is your crypto conference?
No, it's a futures conference, but it's no, it's not Orlando. Thank God.
Yeah.
I mean, Disney World was great. The kids had a great time, but it was always just
a hassle.
It was just a very expensive, stressful hassle. It sounds like such a bad thing for a dad to say, but I would imagine half the dads feel that way.
Easily.
Yeah, you get home after 4 days with a huge bill and a headache. So.
And sunburnt.
A little bit.
Yeah.
A little bit. What about you? You're usually on someone's private jet, off to somewhere.
No? I gotta save up now. I might go to Amsterdam in the summer.
Aha.
So, and that
hookah's calling you? What?
Yeah, that'll be pretty out of pocket. So I gotta start saving because my saving thus far has been into crypto, and so I have to do some different saving because it doesn't look like.
Hey, by August the bots are going to be at all-time highs.
You know,
so you're going to be good.
So, but I have to be prepared if it's not. So maybe some cash.
Now, why Amsterdam? Well, although you've really traveled all over.
One of my good friends is from Amsterdam. His family still has a house there.
There you go.
And so at least lodging will be accounted for.
Okay.
Which will be very nice. But there's a little music festival out there as well.
Very nice.
So we got a good group. I think 8 people will go.
And you got the private jet covered and everything?
Nope.
No PJ this time?
Nope. I'm actually looking for a new credit card.
It's so disappointing when you have to fly commercial.
I know. I'm looking for a new credit card right now.
Us.
So if you have a referral points.
Oh, sure.
Thinking like United or Delta, maybe get a free flight out of it at least. So yeah, we're getting creative here.
Good for you.
It's NVIDIA Day. Happy NVIDIA Day to those who celebrate.
What do you now? Again, they talk about this poor stock. It's had a huge run. It's off a lot, but it's like, oh, this is with 4 down days in a row in equities, and yeah, we're having an update today, but days early, but it's not an incredibly healthy bounce. It's plus, but it's not like getting away from anybody who's been short or looking to lay back into the short. So maybe I'm talking my position more than but this idea that this earnings is going to turn it all around. What are your thoughts about one set of earnings?
I mean, obviously, it shouldn't operate that way. And there's a lot. You know how it is. Like if there's a lot of news around it, it'll always be more hyped up probably than it turns out being. But what is interesting is if you look at the last one, that kind of was a catalyst for just up and to the right. So, it's kind of just a short-term historical bias. Everyone looks to the last one because you only have these quarterly. But now we're in a completely different situation with a lot different momentum. So
in your mind, where does this bleed? Obviously, it plays through the underlying.
Right.
It plays through the whole Mag 7 ecosystem. Then it goes through the equity indexes because there's such large components of each of them. There's a bleed. When I say bleed, just the impact, does it stop there or does it roll into yields? Does it roll in FX?
Yeah, I mean, I don't think you'll see quite a direct roll into FX, but in the scope of the week, we're gearing up for a pretty more interesting week than I thought. We had consumer confidence yesterday stir a little recession fears again. We have some more numbers to end the week. We have durable goods, a GDP estimate, and PCE on Friday. So I think if this folds into the greater story, if we see a little uncertainty, that scares people. We get 3 other data points that scare people. Maybe we can chalk that up to a significant factor. But I think a good earnings report, I don't think, blinds everybody from everything else that's going on.
Okay.
And bleeds
Yeah,
through
and we've got month end coming up,
classes.
which is always a great day to trade on Fridays. So a fair amount of, again, Fed's preferred inflation gauge on Friday.
Yep.
Okay. So we'll get some good back and forth.
And last week in February, usually that's not a very interesting week. When we were looking at it coming into the week, we were saying, in terms of economic events, not the most.
Last week of the month is usually light, but since this is such a tight month, we're actually getting a little bit more juice out of the orange. But well, let's jump over and take a look at the markets because we're actually seeing bonds holding on to their highs. Long end still 117.5. That's the upper end of the range we've sat in. So yield softer, that 2-year getting back closer to 4%. Again, the idea of the direction of travel may be that rate hikes are coming a little bit sooner and with a little bit more certainty. That should, in a vacuum, cause a little bit softer dollar, but we're seeing just the opposite this morning.
Yeah, we've got a bit of dollar strength, especially
currencies, especially Kiwi cannot find a friend right now, and I don't know if it's again tariff talk or whatever. They came out yesterday at 3:45 and said they're going to put looking at tariffs on copper. Copper rallied, I don't know, 2-3%, and it's held on to the bulk of those gains right now. So, but it'll be interesting to see. So again, taxes on goods like copper play through the entire cycle, impacting both commodity currencies as well as us. So still a kind of a struggling story here versus a euro, which is actually slightly south of 105, but much better tape structure than the Aussie and the Kiwi.
Definitely held in, and we haven't really seen we're looking at the daily chart here. We haven't seen any real congestion that we've seen the past few days around this 105 level. If we're looking back, I mean, even year to date, we've only spent a couple days trading in the same range, but a really good back and forth range.
Right.
But now kind of settling around 105. Before we'd seen not really anything above this 105 level dating back to the December Fed meeting. Now are you seeing a little more momentum here as opposed to
I think you're seeing that longs don't get punished so quickly. We've had 5 days, and we've floated on either side of 105. But anyone who's looking for, okay, this is the bottom and we're going to see some extension to the upside, and you would think that yield story would help a little bit, and I think it has helped euro a little bit. You're not getting punished by being long anywhere at 104.80 or 105.10. All of a sudden, it's 104.5 off, 104.50 offered. So it's interesting a little bit to see that very different kind of performance versus the commodity currencies, which are still having a hard time not making you feel the pain of buying the dip.
Exactly.
So different flavors, different trading styles right now. Dollar yen, a little bit of the same thing here too. We've traded again comfortably on either side of 150. Does a big round number mean anything? No, it's just a reference point. But here we look again. Some of the things you'd expect to see an updraft in dollar yen, we haven't seen that play through. And if you had been selling some dollar yen here, depending on where you sold them, you've taken a little bit of heat,
right?
But not okay, it's 151, it's 152. Where am I getting out of this? So it'll be interesting. And you hit on it though. Relatively quiet inside days, some decent back and forth if you're willing to adjust your expectations. But the question comes is today, tomorrow, and Friday, we do have some binary events in terms of data coming out that will affect markets. Lasting or not, who knows? I don't want to guess what the number is, the impact on it, not interested. But I do want to think about how do I adjust my scalping ranges. Right now, if you've been willing to bring them in the short run, it's giving you back and forth.
Right.
Now what do you do? And I think we're going to look a little bit at correlations, which is really going to be interesting because the rate correlation piece with rates at the higher end of the range is an interesting aspect.
Yeah, and we can get right into it. I've got some slides for today if we want to flip over to those. Interest rates, definitely an interesting story. As of late, interest rates are falling. What does that mean for the U.S. dollar? And this is interesting, I thought, because interest rates and U.S. dollar, the relationship in theory should be pretty straightforward. When interest rates are higher, especially short-term overnight interest rates, you're getting more yield for holding U.S. dollars. So there should be a correlation in theory, very strong with who would want to hold U.S. dollars and when. But what we've seen recently in the interest rate market, here I've got the 10-year yield and the 2-year yield. We're seeing from those January highs, we're seeing a big sell-off, a big move lower, especially in that 10-year yield, more pronounced than that 2-year yield. So when you think about when the Fed is going to cut 1 or 2 times, maybe that's not as interesting, and that's closer to the 2-year yield there. But the long-term, perhaps inflation expectations, and longer-term interest rates definitely taking a hit. But it could also be because what was interesting in January is even at those high yields, people weren't really buying bonds, were they?
Right.
And so maybe now the safe haven play with recession fears, people are actually engaging with these bond markets again when they haven't in recent months.
Yeah, I think when you see true two-sided equity risk, which we're seeing a little bit of, but NVIDIA will save us all. Yeah, I think 4.5% wasn't that interesting.
Right.
Now all of a sudden it is. And I think that you're actually, because you would say, well, part of the reason the economy is slowing down is we're seeing stickier inflation, we're seeing this, that should cause yields to go higher. There's always more than one thing driving it, and that idea of, okay, if some markets, if some of the equity exposure is being peeled off, where's a natural place to park it? And it's absolutely in treasuries. So that could be fueling a little bit of, okay, 4.5% isn't that exciting if every day stocks are printing new lifetime highs.
Yeah.
And whether you're a fund manager who's got to, again, hold on to your fund and explain to your customers why you're not participating, or you're an individual looking at everyone around you participating in this rally and thinking every new high is too high to buy, that idea of missing out makes this alternative a little bit more challenging. Now, a little bit of that is changing with this.
Yeah, and it'll be especially interesting to see if any of this 10-year yield decline sticks. We had that consumer number yesterday. That's where it'll really play through when we've been in this environment of high yield savings. If that starts to come down, maybe it is more of a snowball effect than we've seen so far. But wanted to take this price action, relate it to U.S. dollar.
Right.
Here we're looking at the U.S. dollar 3-month correlations to U.S. rates across the yield curve. We've got the 10-year, the 2-year, and the 20-plus year, the longer-term interest rates against each of the major U.S. dollar currencies. And we're seeing some interesting trends. The difference between red and green here is mainly all in part due to which side of the currency pair U.S. dollars on.
Right.
So here I'm just looking at the magnitude because for the Australian dollar, euro, and pound piece, the dollar is on the bottom there, whereas for the other three, it's on the top. So that's where we get the red, the positive versus negative correlation. But we're seeing the greatest magnitude of correlation with the traditional flight to quality assets, currencies, Swiss franc and Japanese yen. And what was interesting to me, we're seeing a stronger correlation with longer term interest rates than short term. Because when you think about it, theoretically, this stuff should move with the Fed funds, the 2-year.
And the equivalent, right. And I think you make a great point. So they're all positively correlated. In other words, and it's a good explanation that depending on where the base and quote currency is, what side of the equation the dollar is on. So the negative number is actually a positive correlation between the currency, the dollar piece, and yields, which again, it's the degree of correlation. And you're right, the safe haven currencies, whether that be Swiss or yen, have a much more direct impact to 10 years.
Yeah, especially that dollar yen 0.65. That's a pretty strong correlation. Do you make anything of the correlation within rates here? Is that, to me, it was interesting. You're looking at 0.76.
That's low.
Yeah, that's what
Yes.
I thought as well, but
Yes.
I have less of a historical basis.
It's how far back did you go on a 3-month rolling?
Yeah.
Yeah, that should sit between, again, 78 and 88. So anything when you see the 60s there or the low 70s, that's awfully low. Yeah.
Interesting.
Yeah.
And so taking a look at those, the dollar franc and the dollar yen, we treat them as a popular story is to say they're safe haven assets. But what is the story behind it? Is it when we see some divergence in dollar markets, we see European currencies acting one way against the dollar, and we see the Swiss franc and the yen, which have had a lot of momentum recently, when we see those outperforming relative to U.S. dollar, a lot of times we chalk it up to, oh, well, it's the safe havens catching a bid here. But is it more a story of converging rates?
Yeah.
Because we're seeing that.
This is a great visual.
We're seeing that with, we have both of them. We have some uncertainty, but we also have lowering U.S. rates. And when we take a look at here the central bank set rates, we have a big decline in the U.S. With this recent kind of shakeup. Our December expectations are now centered around 2 rate cuts.
Right.
A month ago, we were looking at probably just 1. So now we're back to 2 rate cuts. Japan, completely different story. We have been hiking in Japan, and we're currently sitting at 0.5%, and another hike expected this year. Right now, they're trying to guess when that'll be, maybe Q3, so could be for a while. But there, we're seeing a very direct convergence in rates, and that is, it's been very popular, the dollar-yen piece for carry trading. And
Absolutely.
That's exactly where you're seeing this play through, is now there's less appeal for capitalizing on the divergence of interest rates. Historically, if we look back to 2024, at the start of there, it's over a 5% difference. Now we're closing in on 4, maybe 3.75%.
And this is great because, again, we use Japan and the yen and the Swiss franc interchangeably as safe haven currencies. Again, old school, and that was then, this is now. Whatever pit I was closer to, if I saw equities really taking a bath, I'd buy 20 Swiss or 20 yen, whichever was closer, just because I wanted to have a little countercyclical on. This speaks to why that indifference between those two safe havens isn't going to work for you here.
Right.
Because you're seeing a material disconnect in the direction of travel of rates, where the Japanese rates are helping that cause of seeing that yen contribute to more dollar-yen selling, where the Swiss component of whether it's not a safe haven or not, the yield differential is moving in the wrong direction for that play to work. So this really is a great, really clean thing of, well, from a safe haven standpoint, Swiss and Japan are interchangeable. Not so much. And this yen, this rate divergence of trajectory. Don't get hung up in the nominal.
Right.
The nominal's given. That's priced in. What is interesting is when the direction of travel or the implied change, that's where we see rates react immediately. Not when the rate change takes place in the Bank of Japan. That's already priced in. Markets are efficient. But this is a really good takeaway about what do I want, which currency do I want to use when things are happening, give it a change in rates or a change in risk. And a really powerful takeaway here around this really makes it very clear as to why the Swiss and the yen aren't interchangeable pieces to be used for rate divergence or safe haven plays.
Exactly, and this graphic would speak to the Swiss franc being the remaining safe haven asset, because you look at their rate path, they're cutting rates at a more aggressive pace than we have in the U.S. They're obviously didn't get as high, only got as high as 1.75%.
But they were down at negative 2.5% at one point. So on a curve, you're absolutely right. But I think this is a natural drag on Swiss, and that frustration of why doesn't Swiss rally? It speaks to a little bit of that longer term play.
And yeah, December expectations. This is for the end of year here. Put it at 0.25%, but their chancellor or whoever's in charge said they would be comfortable at 0 or even negative if necessary. So,
and there's him. I don't want to have to move him, but I'm going to talk him down to see if I get the reaction I want. And it gives you an idea of direction of travel, which is great. Solid takeaway here.
But yeah, just wanted to bring up one final point here. When you're kind of looking at both of these markets, you're looking at the dollars, and you're kind of wondering why, from a fundamental standpoint, each is moving the way they are. An easy check right here would be to check the currency crosses. You're looking at Swiss franc, Japanese yen, and there you have just a direct relationship, and we're seeing a lot more yen strength in 2025 than the Swiss franc. So more of an interest rate hike piece from Japan.
A fantastic walkthrough of the differentials, correlations. The challenge often is, okay, what do I do with that? And it's like, well, you can kind of, here you've got the product, again, you see the changes in rate trajectories. This is one of the great things with FX. You know, you don't have to build something or have something that has a core. Go right to the rate play, which is Swiss yen, and trade it. And that is a powerful way of being able to, you know, your interpretation of, well, the Swiss may cut more, or the yen are overly aggressive in their rate projections. That builds into your trading strategy. But the ability to express that in one built product that's scalable in size is great. Fantastic walkthrough by you.
Thank you.
Excellent job as always.
There you have it.
Guys, coming up next, Tom, Tony, and Vanetta. We'll be back with you tomorrow for more Forex Focus at 6:30.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
The beauty of thinkorswim was that we were different.
From the name to the front end technology was clearly what